Hi, I'm Dr. Druv and welcome to my YouTube channel. I'm a Canadian physician and this is a channel not on medicine, but all the other aspects needed to live our medicine lives. Today we're going to be talking about term insurance. So we talked about the importance of life insurance in the previous episodes. We understand the importance of protecting our loved ones and ensuring their financial security, which is the reason why we're going to be talking about term insurance, which is one of the most common products available out there. Term insurance is a type of life insurance that provides coverage for a specific period of time, typically 10, 20, or 30 years. Term insurance provides coverage for a specific period at a fixed rate although it changes from certain time periods. It's a cost-effective way to provide financial protection to your loved ones in case of your untimely death. The death benefit can be used to cover expenses such as mortgage payments, medical bills, and other living expenses for your loved ones. And so in the previous episode, we talked about why it's important to have life insurance and why it's important to have term insurance. And so the concepts are very similar. We have a unique set of financial obligations and responsibilities. And so even though we have a high earning potential, we also have a high debt burden due to the cost of our education. And in the case of our untimely death, our family may not receive any wealth but just debts. And so term insurance helps us cover the debts, if not maintain their lifestyle for the foreseeable future, depending on how much term insurance has been bought. This can help in covering those expenses such as mortgage payments and medical bills and so on. And so how does one go about buying term insurance? So similar to the concept of buying life insurance, term insurance is a bit easier to understand. Again, there's various ways of calculating it, but if you were to use the minimum maximum that we covered in the previous episode, so if you wanted a $2 million death benefit policy, which is term insurance for 10 years, and your price essentially would remain the same for that 10-year period, let's say age 30 to 40. It's very important to research, educate yourself, and compare the different options available from various insurance providers, even in Canada. And it's important to find a right advisor who is impartial to the companies, as the way the life insurance industry is built is similar to medicine, is that they may be specialists in one insurance company but not the other. And so that particular person is a bias, so to speak, and will only offer that particular insurance product and not tailor it to your circumstances, or may not be able to tailor it to your circumstances. It's important to consult with your financial advisor and insurance agent to understand the coverage, the benefits, the costs involved, and the ability to convert it to permanent insurance should you want it at some point. It's also important to know what riders it has, such as the guaranteed insurability rider and the accidental death rider. We're going to cover this information in future episodes, but essentially you need to understand what a rider is. It's essentially things that add on to your insurance policy and either provide a little bit more benefit than what you already have. We talked about in the last episode how to calculate how much death benefit you would want, and that's based on various strategies, but using a simple one like your income, 10 times your income, which would help in maintaining the lifestyle of your family at $100,000 for 20 years would be something simple to follow. So in conclusion, term insurance is a cost-effective way to provide financial protection to your loved ones in the case of your untimely death. Life insurance can provide a death benefit to our beneficiaries, which can be used to cover expenses like mortgage payments, medical bills, and other living expenses. And it's important to research, educate yourself, find the right advisor, and purchase a policy that meets your needs, budget, and goals. It's never too early or never too late to start taking control of your financial future and protecting your loved ones. The graph that you're seeing here on the screen indicates that for a term 10 policy, you could see that it remains flat or the price is the same for 10 years and then bumps up in your next decade of life because you're older, closer to your death benefit, and essentially you would have to pay a higher price for insuring against that risk. And on that note, it's 5 minutes, and so hopefully this has been of value to you in a world filled with information. A few action items: if you'd like to follow the exact frameworks used by affluent physicians to take back control of their time and money, then check out the link in the description below. I make these videos because my mission is to help fight burnout in 10,000 physicians across this world, and I wish that someone was there educating me on these in my wealth building journey. But this is my legacy, so to speak, to pass this information on to other physicians and even my own family. Come and join my free Facebook group of like-minded physicians, where we build resources or use resources free of charge, such as cheat sheets, calculators, and everything in between to live our medicine lives. And on that note, thank you very much for listening. Thank you for doing what you're doing, and I'll see you in the next episode.